Hi, this is Z with Optionality. We're going to do a quick market update for September 11th, 2024. Right now, it's a little bit after hours at 4:15 p.m. Eastern, and we're gonna take a look around the horn at the indices, and take a closer look at the volatility products today, and then do a position review. Okay, let's begin. So today we had this massive range expansion day where we had a huge head fake in the morning, which kind of sucked me into the short side, as you will talk about in a little bit, and then they just kind of ripped it non-stop for the rest of the day. I mean, this is just a massive 3% move from top to bottom. I mean, this is I don't think anybody would have expected this. Kind of bounced off this trend line right here, and we've seen a lot of unidirectional move on an intraday basis, which has been extremely hard to play because there's just no pullbacks in any of this price action here. Like if you go to ES, it's I don't even. I mean, I think you would have probably gotten in right here, and just kind of been able to ride this whole wave up. I did not do that. I actually got bottom tagged pretty much today, and I spent all day repairing the Dow position that I put on X and Twitter. Sucks to have my first position back in a really long time that I put publicly go immediately against me, but I think it should pan out okay. We'll talk about that in a little bit. We have the NASDAQ, which pretty much did the same thing. It was much stronger. And I mean, this, if you look at this, it's been a straight line up, but it kind of adhered to this nice trend channel, which we kind of broke out of at the end of the day. So I do expect a little bit of consolidation. Maybe a retest of 19,000, kind of chop around here for a little bit in the overnight. We do have jobless claims tomorrow and PPI, I believe, so there will be some volatility. So we'll see how that goes. It is important to note that I believe basically everything is outside its weekly expected move. I know SPX is. I think the SPX weekly expected move was around 55.30ish, which is actually kind of good that we got out of our SPX put play somewhere, yesterday or on Monday. I think it was on Monday. That's good that we took profits on that. That would have went to zero, but instead we pocketed $1,000, so that's good. I think QQQ is way outside up here, and there's that bullish play that I was talking about yesterday, where we were targeting this downtrend line. On the call vertical, I mean, if you look on the intraday basis, this thing would have been worth absolutely nothing at 10 o'clock in the morning. And I mean, this made almost a 20-point move on the QQQ, which is just absolutely insane. This is like a 2 weeks worth of movement in a few hours. This is what happens when you have, what Elliott waivers would call a wave 2, where they just kind of suck in all the shorts, and once they get a pie in the face, then the the opposite happens to an extremely exaggerated degree. So that's what basically happened today. And let's take a look at the Dow, which really sucked me in here. And the reason why I was kind of bearish on the Dow is because it actually broke the low from a couple of days ago, and I thought that would have led the market down, but it caught the same. The Dow kind of hit the same support that SPY was hitting down here. I mean, it didn't even touch the support. It didn't even really fill this gap right here, and it just rocketed back up almost 10 points. 2% move on the Dow was just absolutely incredible. We really had to scramble to move our calls. We were selling calls up here, but we really had to scramble and move our calls out. Now at least we have some calls before. We still have a good amount of risk on that trade, but I think it'll end up being okay. We got 5 points of breathing room right around now, so we'll see how that goes. We're gonna have to take a loss on it, but probably not too bad. Let's talk about the volatility products, because they really came off today. And like I said before, the thing that kind of tipped me off to the fact that we probably should still remain bullish in this market is skew. Skew has been just falling off a cliff. It went to the 160s and now it's on 140s. I don't know what it's gonna come out at. For today, it's a daily print, so we'll see where today's print is. But this has been kind of the tip off. The other kind of interesting thing is the volatility product. So the volatility product, I think, is still kind of flat across all durations. You see 18, 19. So we do have, I mean, this is, on the 70 days is pretty high. I mean, that's kind of expected with the election on the horizon. But yeah, it's kind of flat all across, but it is. I think it wasn't as flat as it is. I think it was inverted a couple of days ago. And let's take a look at VBIX, which is the volatility of the volatility product. This has really stayed up really high for the last few sessions, and it's really coming off now. And this thing will dribble just like this, just like volatility. It could spend months and months dribbling down and down and down and down. I really only play VIX calls when we're at the low 75. And for those that don't know, BBIX is the volatility of the volatility. It basically measures how expensive VIX calls are out of the money, or at the money at 30 days out. So, actually 97 days is not too bad, but yeah, it's coming off. It's coming off. So yeah, I mean, obviously the charts are bullish, the markets are bullish after 1% update. So everything kind of confirms that. I would say probably line in the sand is 5,500 in SPX. Anything below it is bad. Anything above it is good. And this also gives us plenty of opportunity to kind of sell premium down here against my SPY trend lines. And I mean, we could be we can go in a Sandler rally and easily hit 5,800. It's not unreasonable. Give ourselves another 5. That's about 5% rip, which is basically nothing. I mean, we had a 3% move, so what's another 5% on top of that? So I will be looking for bullish plays. May need to pull back. It always sucks to initiate a position outside the expected move. The weekly expected move, sometimes they'll like to pull back to it. They didn't gap us this time, but when it gets above the expected move, a lot of the gamma juice has already been used up. So kind of sucks to kind of initiate a position out here. I think it's bad location. And let's just start talking about let's go here. Let's talk about these two positions that we put on today. So we have this Dow position that we were bearish against, basically the 61.8 retracement. Let's take a look. From here to here, so it was right around here. It was the weekly expected move. It came in at the uptrend line, so I kind of thought this was a good place to put it on. Obviously not. We basically got bottom ticked, and this thing just ripped straight in our face. We spent the entire day selling whatever we had on the put side and buying call verticals, and we ended up with one call vertical, a 1x3 structure. So let's take a look. We ended up with a 1x3 structure times a lot. This is a 2x6. This is a 1x3 account. So I put a size on 3 times as much across all my accounts. So we have a pure bullish risk defined position in front of this. Basically, we need stuff to come off on 413 strike. I think it will. Maybe it will. Maybe it won't. We'll see how PPI goes. Hopefully, it doesn't gap us in the face. We don't have that much buying power left to move these calls out, so we might just have to take a small loss on them. But hopefully, we can salvage. We can get some money back. We got, I think, about $400 of debit left in this thing. So we have $400 of debit. We have six of these like call butterflies. So we got to get $80 each. We're not gonna get $80. That's for certain. We're not gonna get $80 without this having a lot of premium in it. So we'll just see what happens. I'd be pretty happy if we just kind of go down to maybe like $200. Take a $200 loss here. No biggie. On this one, so we paid about $600 of debit to put on this call diagonal, which I think it's working for us right now. So let's take a look at where it's marked right now. And this is basically against the Fed. So the Fed comes out on the 18th, which is why the volatility is a little bit higher on the 18th. So I bought call here, and I sold something right before it because the markets generally like to hover, go into a holding pattern right beforehand. So you know it's worth $45 now. It got in at 39, so that's not bad. The whole goal is for this to just kind of squeeze all the juice out of this. And you can see on the chart, I mean, it's the underbelly of the consolidation over here. So, in the middle of here, right here, I'm assuming that we're going to have some kind of resistance up here. Just a little pullback in the next couple of days. I think that'll hit all the premium out of this right here, and then because it's the Fed day, the premium is gonna hold up in these calls. So we'll probably try to take a couple of contracts off here and let it run during Fed day. I mean, Jay Powell, I mean, he can pump this all-time highs. Like he can pump this all the way out there, and if we paid only 40 cents to get into something that pays us out $5, I mean, that's going to be absolutely fantastic trade. So we'll kind of see what happens. Obviously, bullish in the immediate term, still bullish in the long term. I mean, this trend line has not broken. We'll talk when this gets broken. It almost got broken today. Whipsawed us. Sucked us in. Such is life. But we got room to run up here. So, yeah, I hope you had a good day trading this. I mean, if you were a directional DT trader, you would have made a killing today. So, yeah, I hope you to please like and subscribe, comment on what you want to see next, and I hope to see you tomorrow. Goodbye.